Any other questions, bro?
Yep. So, she's saying, what three pairs would you study? I would say all USD. What else would you recommend?
Uh,
Two more.
all USD. I would say all JPY is a good one as well. It's a really
Okay.
good one because it's really simplistic to trade, and downloading something like that currency strength heat wave will definitely help you out understanding which pairs are stronger and weaker and when to get in and out of certain movements as well. And honestly, I think those two are like a great place for anybody new to start off. I really do. Like I really feel like all JPY and all USD, they give you a really good understanding of how the US dollar works without having to be a slave to the dollar's volatility, right? Like if the dollar's falling off, that order is gonna pay you. And if the dollar is growing, you just take the sale. Easy. Easy. It's like you're not dealing with a whole lot of, oh man, this is going on. Oh man, that's going on. You're able to get in. And the thing is, even if you're wrong from time to time, it doesn't move that fast to the point where you're gonna have a substantial loss where, oh man, this thing just dropped off, 200 pips. It won't do you like that. So now you can benefit from it, and it's not gonna put you in a situation where you're gonna be like, losing your account or sweating bullets watching the trade go left or something like that. So it's
I
just you
got
always want to take a trade in a you want to take a position on a pair where it's not going to be something that's going to scare you, right? You want to be, especially when you're new, you want to just find your footing first and then grow from there. What's going on, Q? I didn't even know Quentin was in here.
Q. We got a question saying, how do you know when the right time to get out of consolidation?
Okay, great question. Great question. So remember I talked about it as well. Something like, let's say back here, right? We had the market moving up, looking good, right? Looking like a real good uptrend. All of a sudden, we pull back down, bounced up. Let's say you decided to take the sell, right, or something like that. You took the sell, broke the 8, came back down, broke the 8, came back down. Everything's looking really good. Broke the 8 again, came running right back down. Same thing here. Broke the 8, came back down, but it didn't close below your 8 moving average, and then this candle grew. This was your sign to get out of the trade. So if you wrote it down, this was your first sign, and then right after that, what did you get? What did you get? Consolidation. So 8 moving average will help you. 8 moving average will help you. Now, if you don't like using the 8 moving average and it's a little bit too confusing for you, you always want to take your time and find out where your levels are. Okay, so you look left. What was the first area in this uptrend that had an issue, right? Right inside of here. Price just went sideways, correct? So we don't ignore it. We mark it up. As my boy Orrin Wright says, we box this bad boy up like Chinese takeout. Okay, bam. Now you got that boxed up. You go here, you find where your absolute high was. All right. So now you have an area where price either has to break below this area where it had an issue or it has to make another high. So now you know exactly what to look out for. And if you're not getting any kind of price action from any of this, this is where you have to start kind of like telling yourself what's next for you. And you can see what happens. Price is doing what, just bouncing around inside of this ranging area until it finally broke out of this zone and made a lower low, and we just kept seeing lower highs, lower lows from here, drawing a trend line. Nothing broke our trend line. Our 8 moving average is being respected. Everything we wanted to see was adding up when it came to taking a trade like this, going to the downside. So just to keep it simple, look left if you can't understand. If the trade starts going sideways and it's not being profitable, look left and find those zones. If you can't find the zones and you start getting a little doubtful, just close it out. That's just the best advice I can give you, because there's always going to be another trade. There's always going to be another trade. You cannot get into a market or trade or any pair and say to yourself, I don't want to close this trade. It can keep running. If it keeps running, find another entry, right? That money's not your money until that trade is closed. Equity looks real good when it's fluctuating, when it's blue. And then when that bad boy hit red, you're like, oh, you turned into shoulda, coulda, woulda. I should have closed it. I should have took profit. You end up just shoulding all over yourself because you could have just took the money. So you don't want to get into a position where you shoulda, coulda, woulda. And then as my boy David Meniche says, you should it all over yourself. Just don't do it. Don't do it. All right. So profits, always get used to taking profits. Always. Always. When you make that a habit, trading becomes very simple and you remove the greed. Okay. A lot of people don't want to take profit because the greed tells you to stay in. How far can it go? What should I be doing now? Because I'm already so far in profit. I think I should take another position. It's just, listen, you're here to manage your risk. Like we talked about last week, you want to profit a few pips, 15 pips, 20 pips, move that stop loss up above your entry or below your entry, wherever you were. If you took a sell, you're going to move it below. If you took a buy, you're going to move it above. So no matter what happens, you're always going to solidify profits. Just saying, man. I don't want y'all out here playing the shoulda, coulda, woulda game. How many of you guys in this chat have taken a trade, it went in profit, and then it started to pull back lower, and then all of a sudden you're looking negative, and you stayed in the trade? Just let me get a 777 in the chat. If you had a trade that was a winner and it turned around and dropped off into a loser, right? Listen, Kim then blew the phone up and just hit all seven. She went to sleep on the seven. You see what I'm saying? And it's not that you were doing something to the point where the market went against you and you missed something. It was that you weren't exercising good habits of moving that stop loss into profit and not giving that money back. Because this is the deal. You know there's going to be another trade. Tomorrow the market's going to still be here unless it's Friday, Saturday market close, but we know the market's going to be here. It makes no sense for you to sit here and try to negotiate yourself into staying in a trade that's already hit fruition, right? He said, "Hey, a big seven." It's all good. It's all good, y'all. That's why we here. We want to make sure that we can give back. Like, I've had great success trading. Jay's had great success trading. And it's because we didn't trade from a standpoint of greed or fear. Okay. I know sometimes when you go live and you start seeing that money move, you can put 50 cents into the market. Your heart is like, whoosh, whoo, it got hot up in here, man. You entered your first trade, right? You got a $100 account and you took that one trade for the 10-cent position, right? 10 cents per pip, 0.01. And you over there like, man, your whole shirt soaking wet off of the first trade because you just finally started seeing that money move, right? On the demo account, you cool as a cucumber. What they say, you cool as the other side of the pillow. As soon as you go live, you over here sweating bullets. And it's because you haven't experienced this before. And one of my things is I'm a big, big, big supporter of having that experience, right? One of the things I always talk about in my classes is, like, I'm gonna keep saying, if I taught a kid about love and there's a kid that I had experienced love, which one knows more about love? The one with the experience. Okay, you guys have to give yourself more experiences. And my thing is, people say, "How did you guys get so good, Jay? How did you get so good, Kurt?" And my answer is something they hate to hear. It's just, you just haven't lost enough. That's it. You haven't felt enough pain. Because once you get tired of losing, you're going to get angry and then you're going to get focused. And then after that, you turn into a weapon. Because now the distractions don't make a difference no more. You take things a lot more serious. You start treating it like a business. When you treat it like a business, you get paid like a business. You treat it like a hobby, you get paid like a hobby. And last time we all checked, hobbies cost money. I don't know, last time you went to go buy a toy train and it paid you. So hobbies cost. We can't treat this like a hobby. Treat it serious. Take it serious, and it'll pay you like that. It'll pay you like a business. All right. So looking at things that happen in the market and being able to draw these markups up, being able to have those areas in the market where it makes sense. Like, think about this, right? We got market doing what? Dropping off. It broke our exponential moving average, right? Starts going lower and lower. Like we said, if something closes above our 8, next candle wants to do what? Come running right back down. Sure thing. What is it doing? Same thing over and over again. What happens when it gets to this area? People will see this zone right here, and they'll use this as the support, right? This right here is a fake breakout. This broke out, and this candle erased everything that this candle gave us. And then when you look left, where are these wicks lying in the past? Right here at this level, where are the wicks lying right here when you see it? This is the real level, and this was the fake out. You have to be able to distinguish that when you're marking up your zones, right? Everything is not meant for you to just pay attention to it and use it as face value. Some things you have to learn how to cut the noise out of, okay? And this comes with time and giving yourself that chart time, being able to sit and look at it. It's like if I try to teach you guys how to play a sport, I couldn't just keep showing you videos on the sport and say, okay, now go out and play. You have to have practice. You have to have hours and just that experience of feeling what it's like, that muscle memory, getting in position to see something happen, right? Because if you don't have that experience, every time you take a trade, you're gonna be sitting there with the church fans talking some, man, every time I hit buy or sell, I just feel like I'm at the gym again. Like you get to sweating. You cannot do this and do it as a habit. All right, got to learn those candlestick patterns, railroad tracks. Hey, you can go on Google, right? Look right here. Let's just argument sake it, right? Right here, candlestick patterns. Whoop, too fast. Let's see. Right here, boom, pops right up. Candlestick patterns. I'm typing too fast. Images, and what you get. You can go right in here, grab one of these bad boys, run the Kinkos, print it out. Done. Laminated. You in there like swimwear. You got the whole thing right in front of you, ready to roll. Right? And it's just all this stuff is at your fingertips. It's not hard to find. It's right there. Just put yourself in a position. Imagine you got these candlestick patterns, right? All drawn out, all laminated up, and you got them hanging right over your laptop, right? Or right over your station where you trade at. And now you can come in and say, man, this starts making more sense to me because I can just look right up and say, okay, what does a reversal look like? What does the area look like where price is starting to turn around and do something different, right? You come to this, everything starts to kind of pan out, and you say, oh, I could do this. I could look right at this and say, boom, awesome. Let me just see if we can enlarge it a little bit. Oh, too much. Sheesh. There we go. A little bit too much. So having something like this in front of you, what do we see? Price breaking down lower, pulling back higher, breaking down lower, pulling back higher. All these different things that they're showing in for potential buys and sales will be areas we can probably find with our 8 moving average, right? It's not that difficult in conjunction with other tools that we have. It's not hard. Just put yourself in a position to win, right? The same thing I always talk about with the Patriots, right? Tom Brady is a great quarterback. He's a great quarterback because his coach puts him in a position to win, right? All right. Any other questions, guys?
Yeah.
Let's see.
So far, so good, man.
All right, sweet. We talked about how the ABCD rule works out, right? We had our ABCD rule. We drew that out, showed you that. We talked about how the time frames make a difference, finding those times a day to start finding the volatility. Now, this is where discipline kicks into play, guys. Okay. If I told you guys there was a great setup popping up at the chart on the chart, right? Let's say I'm looking at the chart and I'm like, man, you guys, we got a real good setup coming up, right? We got a low leading into a lower low right here. Let me go ahead and draw this out for you. There we go. We got a low leading to a lower low, looking good. Uh-oh. What's at the bottom? Low to a higher low, divergence on the horizon. Uh-oh, we got a break of the 8 moving average. Game time. What's the next thing we see? Huge candle pushing back up into the zone, right? Everything starts to make more sense, right? Boom. Big candle pushing up into the zone, ran all the way back up to the last high. Beautiful. Everything makes sense, but the time of day made the difference here. That's all it was. It wasn't because I was all, excited about divergence. It was because the time of day is right there. Oh yeah, you gotta use Google. Google got all the answers, Ruth. Don't skip out on Google. So I'm not gonna take up too much time tonight, guys. I know we got on here, around 9 o'clock. We're looking at an hour and a half worth of, nuggets and jewels right now. Jay been dropping them in the chat. I've been seeing him in there typing to you guys, helping you out. You know what I mean? He's getting the questions through to me real quick so I can keep everything running in an efficient manner. We talk about a lot of things like risk management and things like that, but think about it like this. Think about it like this, guys. When we talk about like risk management boils down to entry points and patience. Forex is simply just a big game of the patient people taking money from the impatient people. That's it. Every buyer needs a seller. Every seller needs a buyer. All right. So right here, we see the market doing what? Ranging up and down, up and down. People are buying this thinking, oh, we're going to go back up to this high up here. And right here, they were so excited. Those buyers got stomped out by a large amount of sellers, right? And what happened right here? This right here is not normal. Excuse me. This right here is not normal in the market, right? This right here had to be what, guys? Just in your own opinion, what does this look like to you? Go ahead and type it in chat what that may look like to you. Because we know that's not normal. Boom. Right there. See, look, listen, woo, we got some smart folks in here tonight. Man, they already knew. It's news. That is news on Trump. Right. Nora already on it. Trump just said something silly. He bored. He was in the bathroom. They left him alone with his phone again. Somebody get Donald's phone. Y'all let him get his phone again. It's like they chase him around the White House and he hiding in closets with his phone tweeting. So this right here took place. We know this wasn't normal, but this is where we see a lot of big money movers coming to the market. And the same thing happens all over again, right? High, lower high, high, higher high, divergence, right? Right at the levels we want to see it at, right? We're not looking up here all the way. We're using these past levels right here. Price came down here, bounced, dropped off. Same thing here. Pay attention to the signs. You get a high, pulling back down. It broke our 8. Game time. Game time. Multiple candles stand below. Boom. Pushing lower still. So, but the deal is taking this trade, your risk reward has to be there, right? So let's argument's sake this up right quick, right? Let's say we enter right here on the second candle, right? So we would put our stop loss right up in here, and our reward would be coming right back down to this level here, right? Oh, right up in this zone here. So now, just want to make sure it's all looking right. So now we got a ratio of 3, right? So now we're looking at a 3-to-1 or 3.5, right? Almost 4-to-1. Okay. You see the loss would be going up here, closing past this area. Once we got in right up in here after we saw the divergence take place on the RSI and we had a break at an 8, you enter here. We know this is an area where price wants to push back down. We're going to use our past zones right here just to kind of keep us in the safe zone here. We know these are breakouts. We want to use the safer zones here where price is starting to hit these zones. Boom, 3-to-1. This is how wealth is accumulated, right? And you got to make sure you understand that when you take these trades, taking these 1-to-1 trades where you got a 50 pip stop loss and a 50 pip take profit, it puts you in a position where you can lose over and over and over and never accumulating wealth. You'll be sitting just spinning your wheels over and over and over. The trades you take, your risk to reward has to be greater than your reward has to be greater than your risk all the time. This is where you start to research some of the wealthiest traders in the world. They take these things called asymmetrical trades where they take 4-to-1, 5-to-1 odds, and they consistently they're patient and they wait for these positions to open up for them. They won't just jump into every trade saying, oh, this looks like it's a good one, I'm gonna jump in. It has to make sense. The stop losses are very small. The take profits are huge. I'd rather you guys have a string of $2 losers and 5 or 6, $40 winners, right? So that way you can have those small losses, huge gains. This is how wealth is accumulated, right? You're not going to be right every time when you trade, but you want to put yourself in a position where when the market does do things and the odds are in your favor for those reversals to take place in the same zones, you're getting certain signs from the RSI, you're getting breaks of the 8 moving average, everything starts to line up. Now you can have that confidence to jump in using everything else you have in front of you, past information, marking up the chart, keeping everything on the up and up. Things will start to pan out for you in a much greater scale, guys. All right. It's not gambling. It's just managing risk. That's all this is, over and over and over again. And I think the hard part is we've never been taught to manage risk growing up. Our fight or flight mechanism in our brain has never been used in a consistent manner, right? We were taught to run away from risk growing up, right? Going to school, everything was, stay on the beaten path. Don't do nothing crazy. Make sure you go to school, get good grades, get a good job with benefits, buy you a house with a big old picket fence and a red door and a swing in the tree, and just live your life. And it's like, yeah, that's cool all the way up until you realize that ain't what you want. And then it's like, okay, well, what do I got to do? You have to put yourself in the way of risk, because if you don't put yourself at risk for greatness, no greatness can come to you. You can play it safe all you want to and be on the sidelines, but last time I checked, in the arena of life, we all gonna die inside the arena of life. Would you rather die in the bleachers or would you rather die on the field? Because they don't remember the people sitting up in the nosebleeds, but they remember them names up on the rafter. So my thing is this: make a mark, be somebody that people can lean on and say, man, this person showed me something that changed my life, or man, I learned something from this person, or man, this person invested in my company, or man, this person came and invested in my invention. You got to be able to have the wealth to do these things, to put yourself in a position to give, right? It was a song that Drake said, it took a lot to give. I was like, man, If I ain't never known about it, I know about it now. So I want to make sure that we're in a position to give, like me, Jay Wayne. He brought it up to me like, man, how would you feel about doing something on Thursdays, bro? We can actually give back to people, because I felt like, he felt like in his earlier days trading, it was hard for him to find people that were just giving out information. And he's like, I'm in a position to give now. I've learned a lot. I've made a lot of money trading. I'm helping people. I got a team. I want to be able to actually give. And this was like something he came up, and I was like, man, I'm down. Let's do it. You know what I mean? So he put together the idea. He's branding it. He's putting it out there. And it's putting, a lot of people in a position to just win and get those basics down pat.
We come with a game plan, and then we let you ask questions, and then we move from there with you guys. So, but we come in with a game plan what to teach you guys. So we have a lot of stuff that we want to cover, and we want to go deep, but we got to start from the beginning, and we're going to work our way there as a team together.